Hi, this is Dan Encell, Berkshire Hathaway. Today is Tuesday, December 1st. Lots to talk about today, so I'm going to speak fast. First headline, home prices sustained steady growth in most metro areas in the third quarter. The National Association of Realtors chief economist called the third quarter of 2015 probably the strongest quarter in the last decade. So across the board, most parts of the country, pretty strong third quarter. The most expensive housing markets in the United States, 4 of the 5 most expensive markets are in California. Number 1, San Jose, California. Number 2, San Francisco. Number 3, Anaheim. Number 4, Honolulu. And number 5, San Diego. So again, 4 of the 5 most expensive in the country in California there. Headline, home prices jump in September. U.S. home prices rose in September from a year earlier at the fastest pace in 13 months as lack of houses for sale forced home buyers to bid up available properties. Increase of about 5.5% compared to a year ago, and that's the largest annual gain since August of 2014. Home prices right now are rising at more than double the rate of inflation and much faster than wages. So probably not a sustainable. The expectation is that home prices sort of flatten out during next year there. Let's talk about October. Existing home sales dial back in October. Seems like it slowed down in almost all parts of the country in October there. 3.4% down compared to September, but still almost 4% higher than they were a year ago. Median home price up about 5.8% compared to a year ago. They're expecting home prices to flatten out more in 2016. Again, just lack of affordability seems to be sort of slowing down the market there. First-time home buyers, 31% of the market out there right now. That's the second lowest stat there's been for first-time home buyers since 1981 when they started tracking that figure there. So they are not making up a large percentage of the market there. Interest rates are still very low, still hovering just under 4%. So again, money is available. It's very attractively rates right now, so that part's good. Inventory levels about 4.5% lower than a year ago. Also, National Association of Realtors came out with their Who's Buying Homes survey, and it seems like the millennials, people aged 25 to 34, are the largest segment of buyers out there right now. They're making up about 30% of home buyers. So that's a recent trend there, and they seem to be very dominant. I think they're making up about 60% of first-time home buyers. So again, a very strong segment. I think there's about 87 million millennials out there right now. So there seems to be a very strong segment of the home buying market. Looking forward, pending home sales. Pending home sales nudged forward in October. After 2 months of declines, pending sales went up a bit. The strongest area was the West. The weakest areas were the Midwest and the South there. 14 straight months pending home sales, month over month, year over year, have increased there. Again, the things that's holding it back right now is lack of inventory and lack of affordability there. The expectation is that nationwide they were expecting that home values to go up about 6% in 2015. They're expecting that to notch down to about 5% in 2016. So again, fairly plateaued right now. What's happening in Southern California? Southern California has been relatively flat, almost entirely flat since about June of this year. The median price for the Southland area is $435,000, same as September, same as October, and really hasn't changed at all since June. The expectation was home prices were going to go up about 6.5% in California during 2015. The expectation is that's going to slow down to about 3.2% in 2016, and they're expecting most of those gains to take place in Central California, not the coastal cities. So that's what's the expectation for 2016 for California. What's happened locally? For November, there were in the Santa Barbara area 157 new listings, very consistent with what we've had the last few years there during November. The number of sales, though, 101 sales, that's about 35% lower than we've been experiencing during November for the last several years, so it's down quite a bit. Pending sales at 149, that's pretty consistent with what we've had. So again, expect the year to finish out pretty normal, but boy, November was way down. Montecito, number of new listings, 30 new listings during November. That is quite a bit higher than we've seen the last couple of years. But the number sold, 11. It's better than last year's pitiful 9, but it's still considerably less than November 2013 we had 17, or November 2012 we had 31 sales. Really, really slow out there in Montecito, closings during November. But there's 26 pending sales in Montecito, which again is more than we've seen for the last couple of years during November. So expect the year to finish pretty strong in Montecito. So just a quick summary, it seems like the market nationwide, Southern California, and locally has hit a pretty good plateau where they're just expecting, slight increases in prices as affordability and inventory seems to hamper activity out there. So that's where we're at going into the end of the year.